Yeah, I wanted to update you on this trade. I had already made this video. I had explained to you uh, how I bought the stock at the yellow line, kept my stop loss here, booked a 16% profit. I just wanted to give you an update because see what has happened. In a couple of days, the stock has crashed. So selling here was the perfect decision. But why did I sell here is very important. The answer as to whether you should hold on to a stock for a longer period of time or a shorter period of time, the answer to that question lies in the base itself. Okay. So let me come back to that point. Let us first discuss why I bought this stock. So going back to the basics, if we look at the moving averages, the blue, the green, the red, the 50-day, the 150-day, the 200-day. Okay. So it's a nice uptrending stage two stock. That is one reason I bought it. Next, you look at the consolidation. This is point 0.1, point 0.2, point 0.3, and point 0.4. So there are 4 points in the base. There are minimum 10 candles in the base, minimum 2 weeks of consolidation, and 2 contractions. So basically, I am looking for 3 things: the blue, the green, the red, the 50-day, the 150-day, the 200-day, then 10 candles, which means 2 consolidations in the base, 2 weeks of consolidation, and 4 points in the base, which is 2 contractions. So this is point 0.1, point 0.2, point 0.3, point 0.4, and point 0.3 becomes my buy point. So the high of this candle is point 0.3. That's where I put my yellow line. That's my buy price. I buy the stock on this day with an automatic GTT order. So it triggers, it fills my order. I put 2.5% of my portfolio here. I keep my stop loss at 8% below the yellow line. It starts to go up. On this day, I see fantastic volume coming in. I keep my GTT sell order, which is the automatic sell order here, which is exactly 16% above my yellow line, and it hits my profit target, and I'm out of the stock. Now, why do I book 16% profit? First, I'm getting 16% in a couple of days. Okay, that's fantastic. Number two, 16% is helps me finance 4 trades. I am allowing myself to take 4 free bets on the market because my average loss on any losing trade is roughly 4%. So booking 16% profit is like allowing myself to take 4 new bets on the market for free. Even if those 4 bets all go wrong, okay, I still don't lose any money. That's the concept of reward to risk and risk management. Now, when I bought the stock, how did I know that I should hold on to this stock for a shorter move and not for a longer move? Well, as I said earlier, the answer to that question lies in the quality of the base itself. So if I look at the height of the base, so from here till point 2, look at the height of the base, it is 30%. So anything above 20% is a low quality base. So this stock has contracted or corrected 30% almost. So it's a C grade base. Anything within 10% is a A grade base. Anything between 10 to 20%, it's a B grade base. Anything between 20 and 30%, it's a C grade base. And anything between 30 and 40, it's a D grade base. Anything beyond 40%, I am not buying the stock. Okay, it's corrected too much. So this is a C grade base. So that itself tells me that if the stock breaks out, the rally is not going to sustain. Okay, on this day itself, I knew that this is not sustainable. Look what happened in a couple of days. See, in a single day, the stock creates a falling window and crashes 15.10% in a single day. Okay, so if I had not sold here, I would have lost all of that unrealized gain. If I would have waited for, the for the stock to close below the moving averages. See, these this is the 8-day exponential moving averages. If I had waited for the stock to close below this, I would have not made that 16% gain. So sometimes it is not about the moving averages. Okay, sometimes you have to look at the base and take a decision whether you want to hold it for a longer term or a shorter term. So number one, it's a C grade base, so I'm going to hold it for a shorter term. Number two, when it's a C grade base and there are shakeouts in the base, see, this is a shakeout. People who put their stop loss here are shaken out of this trade. So when that happens, I draw the base. See, yeah, this is the base. So if you see here, the shaded area is the upper quarter of the base. If I divide the base into four different equal parts. So in the upper quarter, you see there are two candles that have closed in the upper quarter. What I expect to see on this stock is that after point two, the price should gradually go up. It should take around 1 or 2 months for the price to go up from here, consolidate here for 2 3 weeks, and after 2 3 weeks of consolidation, okay, then if I buy the stock, I would hold it for a longer term. So the purpose of the shaded area is to figure out whether you should hold it for a longer term or a shorter term. It is not a question of whether I am buying or not buying. I am buying the stock. But the thing is, should I hold for a long term or should I hold for a shorter term? Now here there are only two candle closes in the top quarter. There is no consolidation. Ideally, I would have liked to see the price go up, price take around 1 month to reach the upper quarter, then another month to consolidate inside the upper quarter. All candles should close inside the upper quarter. And then after 2 months of this digesting period, okay, then if I buy the stock, I would hold it for a longer term and track the moving averages, preferably the 21-day exponential moving average. But that is not the case here. It's like buying the stock exactly at the right time, getting out at 16%, using that money to finance four trades. So that is my thought process on this stock. So I hope you understood and learned from this trade. I hope now you understand that the the quality of the base determines how much should you hold on to a stock. Higher the quality of the base, the longer you should hold on to the stock. Lower the quality of the base, the smaller time frame you should give and take quick profits out of it. Okay. Thank you so much.